Hmm. That's weird. One second, my camera's not working. It's very odd. Hey, yeah, I'm just trying to figure out why my camera's like being fucky. Okay, that's working. Okay, that works, but I don't want that. Haha! I did it. It's been alright. What about yours? Your hair is wild? Is it? Are you sure? Maybe it's a different Stefan. I did not hit her. It's bullshit. It's not true. I did not. Really digging into the room quotes for the obscure ones, huh, Gilgamesh? Open if it's in GS. I don't know if it is. Nope. It's getting pretty close to long-term resistance. Out at like 250. Zero context is required for the room quotes. That's because there were no context. There was no context for the quotes in the original film. You should just leave your stupid comments in your pocket. Don't worry, Gilgamesh. They're curing people every day. What's up, NW? Yeah, we don't have open on here because it just became slightly more expensive penny stock. I am like aware of like the thesis behind it and all of that though. No, I don't think anybody would like to buy your brother. 111,000 leap contracts in 2027. What strike? Are they just sold? Just tell us that open isn't the new secret stock. No, not at all. No, no, no. The new secret stock's not even a secret stock yet. There's currently some issues with it that I need to think about as far as risk is concerned. Sad. $1 sold. Good, because I don't have any cash now. Have you tried calling 1877 cash now? Have you guys ever had citrulline malate as a supplement? It is the most bitter shit I've ever tasted. I know what it does. Well, it increases arginine in the bloodstream. But the malic acid in it is fucking rough. Very sour. No, no, no rowing machine yet. Still just doing 5x5s and walking. Citrulline? It's like a precursor to NO2 production. So it's like it's just more effective than taking arginine. We trying to get in shape. I'm trying to be less fat. I also just finished a walk. Nice. I'm 105 pounds. Can you give me some of yours? You need to lay off the Adderall. Or I need to lay it on it. I don't, one of the two. Ignore my sugar suggestion then? I will. Don't worry. Also, apparently erythritol, which is causing seizures. That was interesting. Did you guys see that study that came out like last Friday? No, he's 105 pounds, 6'9". He's just all dick. Small bird bones. Anyway, what do you guys want to talk about besides open? Because I don't have any data on it. I can add it to the thing because everyone wants to fucking look at it. You're like the ninth person to ask, so I'll put it on the ticker editions. Where the fuck is that thread? New tickers. I think run is already on there. Like to be added. I don't know if it's been added yet. There's ROM. Which is Rumble. Run is Sunrun, right? Yeah, that's not on there yet. It is on the list to be added though. Will weighted vests improve my trade? No. Only like level 3 ballistic plates worn in the appropriate armor carrier. Can you add 9? No. No, I cannot. It is a penny stock options platform. It's like 78 cents a share. There's what, 2 strikes on the whole chain? I mean, there's just no options volume there. So why would I add it? IWM and breadth still seeing the rotation push that we were seeing before out of NQ. Yeah, I mean RSP still overperforming a little bit in the last like week. Although I will say that the prior 2 weeks performance was better. This week I think it was almost flat. Maybe even down a little. Actually, it was down a little, like 0.13. So 13 bip drop on RSP. IWM was, I think, also down this week. Maybe. I know IWM was up 28 points. We're still seeing a lot of runners in mid caps, shit like Webull and Open and stuff like that, where we're seeing a lot of short covering. That I think is just a product of time and pressure more than it is any like bull thesis on small and mid caps. Like we're getting close to being like 90 days out from the April drop, and so like overheld short positions are just getting like a little bit squeezed off some places. But I would say broadly on both the equal weight index and on IWM, we're not seeing all that much price improvement yet. I will say IWM is pretty interesting above 25, like 225. GLD is not bad, but that's probably the best you're gonna get. Gold used to have like a fairly liquid chain, Barrick, but that's a minor, so it's a little riskier. I also think they changed their ticker. It's just like B now or some shit. I don't remember. I think it's just B. Yeah, you can trade gold futures or like mini gold minis. What's going on with Bull? It's ripping like pretty hard. It has no negative gamma on the chain either, which is super fucking weird. So like if we go look at Bull, you'll see something that happens every once in a while on GS, and that gamma neutral is just a flat line. That's because there is no gamma neutral. There's literally no negative gamma anywhere on the chain. So gamma is positive everywhere, and so there is no gamma neutral. Although I will say that it's very near like the top of its range currently. Well, in order to have a neutral point, you would have to have a negative and a positive, right, Gilgamesh? At least to some degree. Like you have to have a yeah. I mean, I can find like gamma mean, but that's not the same thing. So you generally when we look at our gamma curves, you've got gamma below negative and above positive, and then the neutral is usually somewhere in here, and then the max is usually somewhere up here. But yeah, Weeble doesn't have that. It's just gamma positive over the entire chain, so it's all positive. No epic pen. Oh motherfucker. Whatever. You guys can just listen to the words I'm using. Fuck you, epic pen. Yeah. So generally, when you look at gamma, it's like that. You have something going on like this, or like this, and your neutral points generally in here somewhere, and then you have your flip directly on the 0 point of exposure. If this were Gax and not gamma, you would have your flip there. But this wouldn't have either on Gex or on actual gamma distribution because it's all positive. Which is, I mean, it's interesting, but it's not that interesting. It happens a lot on strikes that have or stocks that have like a lot of interest but a low price because the bottom of the chain just fills up with positive gamma. SPX doesn't have that problem. SPX has lots of negative gamma. So this is all fucking negative. This is Gex though. This isn't this isn't the gamma distribution. This is the gamma exposure distribution. Yeah, you want to talk about CoreWeave? I shorted the fuck out of it on Friday to make my money back for the calls I bought at the bottom on, what was it, Thursday? It's got some room to move down. We could keep going. Friday was wild, though. Down like 7% or some shit. Next downside support's around like 105 on the technical side, and somewhere in there for like gamma, like 100 to 105. So it's still got more room to sell off, especially because I think vol's spiking. Yeah, like 30-day IV moved up on the drop. Although 10-day IV is not doing much. 60? Kind of shit. 90 ticked up a little bit. Yeah, I would say it's probably still got some more room to move down. Like 120 should be supportive a little bit, but if it fails 120, I could see it pretty easily dropping down to like 100, 105. There's still like quite a lot of negative delta. If it bounces, it's probably gonna bounce hard as fuck though. Yeah, they can sell and sup. Yeah, Vega exposure picks up to the downside at like 120, 110, 100. It was set up for such a good bounce too before the downgrade. Do you ever factor that in? What? I mean, a lot of that you can just see in the options interest. Like if the broader interest in the market is pulling back because of like you may not know what event it is, but you can see the movement and positioning, and then you could go look and find the event. Look at the delta on it. Delta on it's dropping off really hard, and puts are being like more bought, which is kind of wild. Take a look at AMD. Sure. Yeah, AMD slipped back below Gamma Max on Friday. Gamma Max is still moving up, but it does look like skew adjusted delta is starting to fall off a bit. Gamma's still quite high. Yeah, all around spot. Gamma's still very high. So this whole range, like 150 out to like 160. 150 and 155 particularly are pretty supportive. A loss of 150 would be kind of bearish, but I don't know if that's going to happen just yet. Looks like there was some pretty heavy vol shorting on Friday. So maybe sold calls coming in out of the money. We could take a look at volume. Yeah, looks like the 160 call got sold pretty heavily Friday. 165, 170. So probably well overdue for a bit of a pullback. I would still be cautious of it finding support at 55 or 50 though. Anything interesting on FSLR? It looked really good for being long for 0 DTs on Friday. And it was okay. Went up a couple bucks. Actually bought some of those. It was like I think I got out at like 176.50 or some shit. It it ripped and then sold off pretty hard, like fairly early on the day. Sold calls 55.60 that got hammered last Friday. CRISPR? Yeah, it looks like 65, 67's about the top before gamma starts to fall off. I will say that the moving 30-day vol and 10-day vol are both pretty strong. Like it doesn't look like a lot of people are selling calls here. Or maybe they just got blown the fuck up. Hmm. Yeah, maybe the 70 call is getting sold a little now. But still it's still got a little bit more room to the upside. It does look like 67.50. Above that, gamma starts to fall off. Not a lot though. Um but it would definitely be hard to move like above 70, I would say. Huh. Oh shit. Anything interesting? Hey Girk. So Dexa divert from each other, and Gexa divert from each other is bullish. How far the gap is from each other equals bullish. When they're converging, bearish. Not always bearish, but just like can be just kind of flat. Generally speaking, convergence is like a little bit more bearish, but I would say both need to be converging. You generally don't see them converge at a rapid rate because as price falls, then puts start to become bought, right? And so then you generally will see Gexa move up because the botness of puts is increasing, despite total delta like falling off. So like if you look here on this, SPX is always the best example for all of these, but I do like to show how it works on other stocks as well. But see, this isn't really like convergence. This is just like Dexa just dropping off massively. And then I would say Gex has a lot more convergence divergence going on. If you look across like the cycles of higher and lower gamma. But also remember that like those don't cross each other. Or they shouldn't. Yeah. But them touching like so like Gex hitting its skew adjusted level or skew adjusted delta hitting the nave delta level, like those are both like very strong reversal signals. because that's like the most bearish outcome that the options market is pricing in, is already like being realized. Yeah, I could look at Neo. I mean, I don't want to, but yeah, it went up a little bit. I don't know if that's going to be sustained, but it looks like it repriced a bit. Which is, I mean, it had a decent move earlier this year too. Roughly the same level. This is slightly higher. Still looks like accumulation. I would say maybe if it gets out back above like $7, there might be some there might be like a longer term bull case on it. More sales in the new model. Yeah, but still have to worry about China tariffs and shit. So, a lot of geopolitical pressure. Yeah, no problem, Space Monkey. I don't think Dork or JFresh are making it today. Roblox? Yeah, we can take a look. I didn't want to sell calls on it last week. Mm, yeah, I don't know if I want to sell calls on it yet. Maybe not. Maybe if I start to see like a turnaround in IV10, IV30. But they're still like IV10's still rocketing up. And this is so blown out right now that there must be just like a shitload of near-term positioning coming in. Like very close to spot. Yeah, if we look like out into August, there's a shitload of positioning at like 130, decent amount at 125. All of this is like supportive now. This range is hard to hold, but a breakout above 125 could push even higher. I would say the 30s probably, let's see, like the OPEX call, it's probably being sold a little, but it's hard to tell. Let me look at something. Uh, Looks like IV falls off pretty hard after August 1st, so yeah, I guess like if a vol short we're gonna come in, this is a probably a fairly advantageous price for it to do so. I would say we would probably see volatility shorting come in after the first, because like look at the fucking IV, like on the 8-1 expiry. That's kind of wild. Is that when do they have like earnings or something there? Yeah, earnings are July 31st. So pretty much just a constant uptick in implied vol until earnings. Although given how much delta the MM's probably carrying here, I would say that if earnings are even like flat and not just a massive beat, um the MMs are going to dump a fuck ton of delta post earnings. If they're bearish, it's gonna be nasty. Are you feeling happier or still low in the dopamine serotonin? They're still really low. But like they're bouncing back. Like the medication I was taking that like suppressed them was like for my allergies, and I stopped taking it like about 5 weeks ago. It's got like a 45-day half life, so you can do the math. So I should be back to like half normal in like 45 days, hopefully. It doesn't affect me that much. It just like makes me like really irritable, and like it's very hard to like sleep, and then when I do sleep it's hard to wake up, like really hard to wake up. Like I'll be awake, I just like can't get out of bed. Once I do though, it gets like better. Yeah, I should be all right soon. What's normal, Precious? I don't know. I think that my doctor said above like 0.2 like micrograms per milliliter or liter. I don't know what the measurement thing was, but mine was like 0.12, which is really low. I think it's like 0.28 to like 0.6 is normal. 90-day trial of depression. Yeah, basically. Did they warn you ahead of time about the side effects? No, they didn't mention that one because it's really rare. It's like 1 in 10,000 people experience it, so it's not one of like the common side effects, which are all also shitty. But I should be fine. My doctor said it just looked like I was coming off a crack binge, so a lot of people have come off crack binges and they've been, okay. I think. Um, so I did a bunch of research over the weekend on the secret stock, but I think it's a lot like BNet in that there's like things that need to develop before it's worth buying. Like there's a part of me that wants to buy a little bit now in case. I'll say this: there's planned future dilution, and it's very likely that future dilution will exceed the planned amounts, which would depreciate value for current shareholders but not for future shareholders. And so the moment of opportunity seems to be weighted further out. Yeah, it's more of a I think it's gonna have to be more of a watch list stock. Secret stock. That's right, Rims and Tims. Secret stock for pigeon whales. Just kidding. I'll tell everyone about it. But it's just yeah, it's just high risk and needs it needs time to ripen. But if you tell us, it will rock it. I know. That's why I need to build a very large position first. Because anytime I pick a stock, it just either immediately goes up more than, and I don't get to buy enough of it, or it does the exact opposite, and then I've bought it. No, no, you can't have the first letter of the ticker. There's an A in the ticker. Replace the money being spent on the house, I should say. Can I buy a vowel? Ha. Yeah, it needs to ripen a bit. It's not quite ripe yet. But it does have warrants. It's got all the fun stuff. Don't worry. Conspiracies and everything. It's gonna be great. It's definitely not AMC. I said there's an A in the ticker. I didn't say it was AMC. What sector? A cool one. Risk of delisting? Not yet. But I would say that's definitely going to happen. Is it on the verge of bankruptcy? No, they actually have a decent amount of cash on hand. But they are definitely going to need to continue to borrow heavily. And if they're not able to drive up revenues and net margin in line with their borrowing, then obviously they're going to face some serious funding issues. Risk of dilution, certainty of delisting. What are we waiting for? I think I'm kind of maybe waiting for it to reverse split. And then for the reverse split to get the fuck diluted out of it. And then I might want to buy it. It does sound like a pickle jar stock. And in line with that, the bull thesis is extraordinarily speculative and existential, which is those are the most fun stocks because it leads to rampant speculation on if the thing they're doing would ever actually work. Perfection. This sounds like Apple. I didn't say it was a bearish stock. Will Carvana have to disclose the end of payment in kind at the end of the month for earnings? Yeah, for the tranches where payment in kind is ending, which is the majority of them into the second half of this year. So they're gonna have to pony up some cash, which might mean that they need to stop taking a loss on every car they sell in order to drip feed all of the investment capital from Carvana into subsidiaries that they own ownership stakes in. What? Fraud? I didn't say that. Who? Never. So much fraud. Somebody. Somebody did. Does the company make money? They actually do. And their potential for making money is very exciting to me, which means it's really nerdy and boring, but Upstart? Oh, this would I don't know if this would be like Upstart. I don't think it's exactly squeezy. I think it's like long-term appreciation of asset value would drive valuations substantially higher than they are right now. So not exactly like Upstart. Upstart was just squeezy. Upstart had a fuck ton of short interest on a company that like just simply wasn't dying, and that's why it that's why it squoze. That's why it did big squeezies. And it's a penny stock. It's worth less than $5. Although it probably won't be a penny stock by the time I want to buy it. God, you guys are insatiable. If I tell you about it now, you fucking morons are gonna buy it and lose money. Well, some of you. Just automatically. Like tomorrow morning, market open. Yeah, I know. That's why I'm not saying anything. I'm not trying to tease you. You guys are teasing yourselves. You're the ones who keep asking me about it. I wasn't even fucking talking about it. No, but there probably will be in the future. I don't know if I'd want to play options on it. I don't think it has any. Sacrifices must be made, Girk. The market demands its share of its pound of flesh. Did the data out of Japan look like they may raise rates this month? I mean, they should have been raising rates all fucking year. Which data specifically? Their industrial production fell pretty hard last week, and I think inflation was not inflation. I think inflation was like fine, right? It came in a little lower, but like the inflation rate X food and energy went up, which was strange. I think their exports continued to fall pretty sharply, and then imports were up. So I mean, it does seem like if tariffs go into effect, they're probably going to experience some inflation from that. The question is like how much longer can they go without raising rates and not just obliterating like future wage growth. Nagi, yeah. Look at you taking credit for us fucking morons losing money. Listen, it's not that, but it's like people are illiterate. Like if I write a ticker in pickles picks, someone's just gonna like buy a call on it. So I have to be conscientious of people's inability to read a sentence. Like ASTS last week, where I was like, oh man, this looks like a really good short if it breaks below gamma neutral. And then the next morning, it never broke below gamma neutral, opened massively above it. And the next morning, people are like, I'm getting fucked on this. Because they just bought it at open. Fucking ethics, man. Yeah. False. We only ignore stuff that sounds bad, like risk or stop loss. Can we get another ticker letter? No, there's already one too many. The amount of NOV calls I have is disgustingly because I can't read. It taught me a valuable but expensive lesson to read everything I say. I mean, like I can do a lot on my side to help people find plays and make profits, but I cannot do any of the execution. And so I can even outline it. It just, I don't know, it blows my mind that sometimes I can pick like an absolute winner and people will still find a way to lose money on it, or people will lose money on something that's like unconfirmed or hasn't even tested its entry level. Thank you. I know some people do, some people just don't. I've posted a few in options place chat this week. They were quick scalps, but they all printed. Nice. What? Oh, just like the stream shit we talk about on stream. There was some good ones this week. How were what was the win rate on the zero DTs? I didn't get to play all of them. I only shorted CoreWeave and I went long FSLR, but I don't know, how did the other ones do? No, Palantir, Seg, Tesla. Oh, I didn't check RH. Yeah, RH was like fucking down flat all day. That ended up not being very bullish. Argen went down. NXT was flat. Hmm. I've had trouble playing G-Scam plays because I don't feel familiar enough with most of the tickers, if you know what I mean. Kind of. I'm hesitant to interact with other stocks sometimes because I don't know how they move. I like knowing where resistances are and what the usual looks like. But you could use TA for that. That's why we have like historic data and all of that stuff. My UUU calls are doing amazing. I'm happy about those. Oh, nice. Oh, wow. Yeah, that did very well this last week. Thanks, Mav. So my KRE puts that are still open are not a good idea. I don't know. KRE hasn't quite reversed. How much time do you have on them? Because Delta started to fall off on KRE pretty hard on Friday. Um, yeah, it might just be topping out again, like back at upside resistance. Like volatility, both on the 10 and 30 are lower on the retest. There's not much room to the upside. I mean, like 65 maybe, but I still have like 30% of my puts left on that shit. Carry's also a big tariff dump if it happens on August 1st. Yeah. Yeah, same. I have OPEX since September OPEX. August and September. I still think I'm fairly okay with shorting it. When SPX and macro, we could take a look at the macro stuff. Yeah, I guess without Dork and JFresh coming on, I don't have a lot to go over. Um, I got like news from the weekend. I think like Lutnick spoke. Trump and Xi are supposed to meet ahead of the APEC summit this coming week. Um, Fitch affirmed Canadian debt. I think like 10 and 5 year net short positions on futures both got trimmed a little bit this last week, so possibly some prep as we move closer to FOMC for rates to move higher on the Fed not cutting. Um, I think S&P like net longs got trimmed a little bit. People are still going long yen, long pound. Mm. Supposedly Waller is going to dissent. So Waller really wants JPow's job, but he was saying that he was gonna dissent if there's no July rate cut. Although I feel like there's like 7 people that would dissent if there was a July rate cut. So I mean, he's just clearly trying to ingratiate himself with the Trump administration. Supposedly, Basant made a case to Trump against ousting Powell, according to the Wall Street Journal. So, yeah, I mean, well, that's what we knew all along, right? We knew that Basant was the one trying to keep Trump from firing Powell because it would be extremely damaging to the U.S. debt markets. So over here, Friday we got a continued downside move in put and call leverage. I think if we want to look back at like the week over week change, back on the 11th, put leverage now versus then. Obviously, put leverage is a little bit lower, mostly out of the money, but call leverage uh, to the upside. So in the money, call leverage fell, as did or out of the money and in the money call leverage both fell pretty sharply last week. So fairly big reduction in total delta. It doesn't look like there's any major move in delta now for like about 30 days. Obviously, most of the interest being out on the September contract now. August OPEX is generally not very big. But yeah, I guess some fairly interesting moves there with both Delta on calls falling off to the upside and out of the money put Delta declining to the downside. Um, but still, like, I mean, there's still like 4.2% below spot where put Delta stayed the same. Only under like 4.2% did put Delta actually decline. I don't know if that's. I mean, the peak of put delta is down to like 11.5, but I would say it's not down very much, and it's still roughly in the same place, like 5.7% out of the money. I'm more interested in the out of the money call leverage falling off. um I don't know if that increases the likelihood of a pullback before August 1st tariffs, but maybe by August 1st tariffs. I'd be really interested to see if the total put leverage on the chain started to move closer to spot. So if we see like the peak of put leverage start to move up, I feel like that would be pretty interesting. Or just the overall put leverage decline sharply. What's wild is that we're like at all-time highs, but put leverage is like already significantly lower than it was on June OPEX. No, because a lot of people are currently locked in at very low interest rates, so they think they can wait out the market. Something that's been increasing at a really rapid rate over the last several weeks is that houses are being removed from the market. Um, at I mean it's become very common in almost all markets across the U.S. So what's happening is, sellers are coming to the market. They aren't getting the price they want, and they are choosing to wait. I saw it fucking happen on a house I wanted. Yeah. I mean, right now, so far the labor market's strong, but the problem with them waiting, right, and waiting out past the peak of the market is that if they come back in here, they're gonna get fucked. right? So if the market's already and it already is beginning to downturn, right? That's why they can't get the price they want. I mean, you have to remember a lot of these people bought houses for like 250K and they're trying to sell them for like 500K fucking 2 years later. So this is just greed, right? These are people that are assuming a rate of return that is absolutely fucking absurd. Given that the long run rate of return on housing is like 3 to 5% per annum. This is the fact that they're demanding this price for houses they bought 2 years ago is fucking nuts. So they're retreating for now, but here's the problem. You know, they're not getting 500,000 now, but they could probably get 400K now pretty easily. Like this would be achievable. But they don't want to sell for that price. But they'll come back to the market later when housing prices have declined further and they'll try to sell for 500K again, except now they won't even get 300. And this is as that spread widens, you know, more and more of the market is going to continue to drift downwards in pricing. And these people are they're going to be in more of a, like, not as stable of an economic position. Now, this is broadly across groups. Obviously, there's going to be individuals that can hold this 500K house for 30 years. But not everybody's going to be in that same position. And once the labor market starts to destabilize and if you get a recession during that period, those people will then need to sell those houses. Home sellers, same like bag holders. Yeah, basically. Except, the market doesn't work the same. It's becoming more and more similar, but supply is already exploding because more and more people are selling. The number of houses being listed, rocketing. Has been for the last like 5 months. Yeah, everybody trying to sell the top. But there's no buyers at the top. That's always true in the housing market. Nobody wants to buy at the top because, at the top of housing markets, you have two things that are almost always true, and that's that house prices are ridiculous. And rates are high. So the cost of finance, prevents people from wanting to buy houses at higher prices. Someone's got to get the money, and the banks are going to hold the line, right? They're not going to want to drop rates. So, and we've been seeing it. It's very slow, which I told you guys 3 years ago that this decline in the housing market is not as rapid as declines in the stock market. It's not going to keep pace with how quickly stocks and bonds move. But that's also because you have a lot of like little regional markets that can, and now those little regional pockets can elevate prices across the entirety of the country because of things like Zillow and Redfin. And so you're going to get like a lot of pricing disparity. So, because somebody in California thinks they can get like 3.6 million for their 2-bedroom, 2-bath beach shack. Some guy in Ohio thinks he can get, 600,000 for his 3-bedroom, 2-bath fucking micro ranch. And this is not true, right? Like, obviously house prices in this region are going to be less impacted than house prices in this region. But both of these regions are, basing their pricing off of one another in aggregate. And Zillow and real estate agents and stuff like that are largely responsible as everybody tries to effectively yield seek off of the market. Micro ranch. You know what I'm talking about. It's like every house in the Midwest. They're all like living room, kitchen, Fucking 3 bedrooms somewhere down here. And like a bathroom. They're all the same house. They're fucking the Midwest is littered with them. 1 floor. Smells like old people. Yeah, Seattle's a market where there's the inventories are rising very quickly. Florida, Texas. I have 2 bedrooms upstairs and 1 down. I'm unique. Oh, you have a little micro split level. Nice. Fancy. Do you have a staircase directly in front of your front door? That's always been my favorite. It's like a Dungeons and Dragons house. Like you enter it and it offers you your first choice immediately. The government's also taxing people at those rates. It's not just the sellers asking those prices. Yeah, I mean it doesn't matter, right? It's still largely the assessed values on homes are not equivalent to their sale prices right now. And that's because they made improvements. I don't know what they expected. Bunch of house flippers stuck with houses that they can't move because they want 100% return, but they made structural modifications and improvements that forced a reassessment of their tax rate. Okay, stop. I don't want to talk about it. Choose your path to Adventure House, Library Edition. Average tax assessment where I'm looking is 300K. Sell values between 500 to 750K. Yeah. If houses were selling at their assessed values, the real estate market would be very liquid. But they painted it millennial gray. Surely that deserves an extra $150,000. The entire house is the color of the kitchen countertops. God, I fucking hate that. I can't believe people would buy that and live in it. I could actually buy a house in cash thanks to Gamma Strike. Nice. That reduces your cost of finance. So there's other ways to reduce your like cost of finance over time, right? You could just pay more money towards your principal and reduce your like effective rate over 30 years. There's ways around it. I mean, the cost of finance is still not free, but you can definitely reduce the cost of finance dramatically, especially if you already have the cash on hand. But I mean, people are going to the housing market as an investment because they get leverage, a lot of leverage, where they would otherwise get very little. Otherwise, the returns in the housing market are dog shit. You could buy Nvidia 2 years ago instead of a house, and you would have drastically better returns. It's supposed to be like an inflation sequestration method, essentially. But over time, unless you have a really good house and you're really lucky, the cost to repair and maintain the property is probably equivalent to the rate of inflation over time. And so the net gain from buying a house and then selling it later is usually very minimal. Unless you buy a house that's, in very bad condition and then, fix it up and sell it for, some sort of positive margin. Funny thing is, you're seeing the same stuff happen in Scandistan and other Euro hubs. Huh. Yeah, that seems like a niche market that could be exploited. In my area, high-end homes are the ones that are going into multiples. What's that all about? What do you mean? The high-end homes are the hardest ones to sell because I mean, just the tax rate alone precludes most people from buying them. Generally, their assessed value is really high, and so the property taxes are astronomical, which bumps up the monthly payments really significantly. This is why, I mean, this is one of the reasons there are so many higher end homes hitting the market, and also why they're not selling. Honestly, over time, I think like the most stable homes are 2 and 3 bedroom, 2, 3 bath. Like their pricing is most stable over time. So like starter homes, basically. There's a lot more volatility in home prices at the top end. They can only afford that because they have jobs. But that changes. As someone who did all the work on my house before sale, I couldn't imagine paying a contractor and getting as much out of the price as I paid someone else to do the work. I mean, yeah, I mean, if you're paying a contractor, you're just removing your own, like you're basically paying for time. They're gonna, I mean, and with contractors, that's pretty variable too. But generally speaking, I think most house repairs could be done by almost anyone. It's just going to take you significantly more time to do it than it would a contractor. Well, people who can relocate are going to move to from more expensive areas to cheaper ones, but not everyone has that option. And there's now a much bigger push with the current administration for people to go back to the office. There's a big push in tech for everyone to go back to the office. And then that re-incentivizes home buying in major hubs where house prices are already excessively high. But it also pulls people who moved. So a lot of people during COVID got to work from home, and then they moved to cheaper areas so they could enjoy a better quality of life. But as more and more corporations force people back into the office, that cycle reverses itself, which could obviously dramatically affect home prices in areas that have seen the most home price improvement, like the entire middle of the country. Chicago home prices aren't even that high. There's also like a fuck ton of housing stock in like the Chicago, like the surrounding Chicago areas. How much does who make a year? Maybe that's on BTU. Gex, Gexa, Tipping Sharp, Turnaround, and Delta Gamma. They announced earnings recently. Yeah, which weren't bad. BTU's had some price improvement over the last week. I would say that the downtick in Gamma is probably a pretty good sign. things might be getting a little bit more bullish here, but I think price is going to remain somewhat contained because there's still like the existential threat of tariffs, right? So, and given that China is one of the world's largest um, users of the coal that Peabody mines, they're obviously dramatically affected by how our how fluid our trade agreements with China are. So I mean, yeah, I think it's seen some price improvement. I think it's still like obviously undervalued. But in the short term, I don't know if this is something I would trade. I would say it's got some support at 15. 16's probably some resistance, but it could probably push out higher. I mean, maybe back up to like 20 or so. This week could be very important, obviously, with Trump meeting with Xi. We might get more news on the U.S. China trade agreement, and if that news is positive, um, that would probably be good for BTU. I'm a contractor. Oh, well, there you go. That's what I mean. Paying 60K for a kitchen remodel, you'd be lucky to increase the price of a home another 60K, unless it was a horrid, outdated disaster. Yeah, yeah. I mean, you can only make a margin, and so if you're not doing the work yourself, then you better have like a really really fucking cheap contractor that's willing to do the work. Higher supply drops price eventually. Yeah. Because everybody stops trying to compete for the top of the market and more sellers will start to take less. And that's where you get a shift from a seller's market to a buyer's market. And as the buyer's market takes hold, more and more sellers will come in at lower and lower prices in order to expedite the sale of their home. But like I said, it takes time. I was talking more about the Gex gamma changes. Well, that's what I was highlighting. Are you just talking about like the Friday drop off in interest? This is like weekly's closing. So you don't know where Gamma's going to rebalance out to, but I mean, it's probably going to sell back off after spiking. Like it hit resistance in 16 already. So, I mean, 15's supportive. It could hold on to 15. But if it loses 15, then downside support kind of kind of falls away a little bit at 13. So it could fall further. I don't think it's going to drop like a lot. Unless there's bad news on the China front. But yeah, I mean, Ivy came down a little bit on Friday. Probably some like bot call closing. There's a little opportunity for like short vol as Ivy continues to fall, and like 30-day Ivy is well above historic. So there's some opportunity for call selling further out at the higher prices, and that could create like a bit of a barrier to the upside over time. They start competing for buyers. Exactly. What's your overall port look like right now as far as concentration? It's like, I mean, 90% of my cash is in like short dated treasury instruments. I have like 600 grand in like a yield max fund. And I have like my dividend stuff, which is like, I don't know, 200 like 240,000 a year in dividends, and then my trading accounts, which is about I don't know, 12% of my total cash. So I'd say like 80% in treasuries. It's probably a little bit more accurate. It's like 86%, and then the rest split between dividend stocks and trading ports. Yes, I'm taking on too much risk. Probably. That's generally what happens when you have lower capital. You generally take on more risk because you want a higher rate of return in order to increase your base capital at a faster rate, so you get more appreciation in total capital, and then you can, take less risk and maintain the same rate of appreciation over time. Any dividend stocks that you think are well priced? Hmm. Probably. I mean, I don't know. I think most of the dividend stocks I own are already have already seen a lot of price improvement. Like I have like a bunch of AQN, I have UGI, AT&T, Dole. Those are all like up already from where way up from where I bought them. I do have some Riley. I have NOV, but NOV doesn't have a huge dividend. Also, like I haven't bought that much of it yet. I think I have plenty of time to buy into that. I'm not in a huge rush. The secret stock doesn't have any fucking options. I have some Riley. It's been doing good. I mean, there's always been a long term thesis on Riley. It's just a ton of execution risk. So I have a QDTY that I bought and YMAX that I bought back during like the April dip, and that's probably a fairly big chunk of my income right now. But they pay out like weekly dividends, which is pretty cool. Did you look at Riley on stream? No, I mean we talked about it. I've had a little run out above Gamma Max. The options chain might be getting a little bit more bullish though. Overall, with with Vega turning positive, that's generally a fairly good sign. If especially if it stays that way. I don't think Vega's been positive on Riley since like back in like 2022. It was obviously trading at like significantly higher valuation back then. What about PAX? How's it holding up? I still have my PAX. It's doing okay. It's gotten a little bit tossed around with the most recent announcements between like Trump and Lula. Obviously, a 50% tariff rate on Brazil would be bad for, a company that's heavily invested into Brazilian infrastructure. But I mean, Brazil's got they're a massive supplier to the rest of the world. And as supply lines rebalance, they can still be a big beneficiary. What about GME? I don't think my opinion on it's much has changed much. Maybe like end of month with ETF FTDs, but right now, I mean, volatility is relatively low. Covering is not that significant. There's a little bit of covering going on, but not a ton. Correlation with BTC is still basically at zero. So it's not getting any like tailwinds from that. Liquidity's fine. I mean, there's at some point there's going to be a like and GME very well could have already hit that point where dilution exceeds the incentive for the short volatility positions that drive high volatility on GameStop. How do you know they didn't cover the FTD? CNIS. FTDs are always being covered every single day. Continuous net settlement. No, it's not crime. There was a song. I guess we could talk about well, I think that covers like most of it. Do some projections for this week for SPX, I guess. I think we do have like a fairly substantial amount of data this week coming up. Let's see. We have Powell speaking on Tuesday, which might be one of the last speakers before the blackout, or I guess Bowman, same day. And then the Fed's probably going to go into blackout from there on out. We have tech earnings coming up this week. Let's see. Who's reporting? Oh. Texas Instruments, Tesla, and Google on Wednesday. I think just is that it? Just Tesla and Google this week? Am I missing one? That's a bit more split up than it usually is. No, secret stock's not VRA. I love when we try to guess the secret ticker. I know. This ServiceNow and IBM. There's a bunch of like $100 billion companies reporting, but yeah, it looks like just Tesla and Google are the big ones this week. I guess Blackstone Thursday before open. Union Pacific, Honeywell could be interesting. I'm very interested in the in all of the manufacturers. So, I mean, I would say even though like from like an earnings standpoint, it's kind of weird that we only have two tech companies reporting this week. I guess the rest of the Mag 7 is going to report next week, with the exception of Nvidia. But I'm interested in like Lockheed, GM, Northrop, like all the defense contractors. That those will be interesting. Thermo Fisher, GE. I think like Dow could be really interesting. Union Pacific is probably an interesting one as a bellwether. Especially like with future tariffs coming in. Honeywell will be interesting. Because what I think happened is I think all of the major manufacturers front loaded inventories into a demand cliff. I actually have some decent insight on this, maybe. My friend is one of the leaders in major manufacturing company. Interesting. Less sales, just higher prices. Yeah, yeah, that's what I'm thinking. But we'll see. Obviously, like earnings is going to tell us a lot about that if that's correct. There might be a couple manufacturers that I want to short. I think maybe like Caterpillar might be one that I'm maybe interested in. I might just short Dow though, because that always anytime I want to short Caterpillar, that always brings into question whether I should just be shorting Dow. And generally, the downside on Dow is less erratic. I honestly don't believe they front loaded. Being in the aerospace industry, I know my employer didn't. Just because your employer didn't front load inventories doesn't mean all the suppliers didn't. What happened for them is that they did front load their materials and all. Clients told the company to kick rocks on passing on the increase in new costs with tariffs for 60 to 90 days. Ouch. Yep, that sounds like more like what I expect. I'm not saying aerospace or defense will be the most affected, but a lot of their suppliers could be. And also, those are the industries where like the steel and aluminum tariffs are going to have the most impact. And these are in effect. So these have been in effect since April, which will be interesting. Especially given that like manufacturing and finance outperformed most of the run to the upside on the S&P. So those I would say that both of those sectors are already massively overbought. Now we hit that time frame, the clients are going to begin eating the increased costs from tariffs. So they'll not meet their usual profit margin, but their clients are going to sell their products. Yeah, yeah. I expect that the hit to manufacturers will be short lived, but then the margin contraction will spread out further into other sectors as you move away from like the core supply lines. Yeah, so I expect the impact, and this, I mean, there'll be layered stages of this though because of the way the tariffs have been implemented. Right. So the tariffs that came in April are going to impact manufacturers probably here in Q3. And then in like Q4, Q1, we're going to see the impacts to net margins and discretionary. But then you'll also have like the August tariffs, which are going to impact, probably going to have the same effect, except maybe less front loading. But that'll probably hit like Q1 on manufacturing and then like second half 2026 more broadly. But the inflation effects, I mean, those will probably come in somewhere in between. Because as you get the margin contraction, you're gonna see the inflation effects like rise. Because core like base demand is like, even if it doesn't accelerate, it'll be persistent. Yeah, so tariffs doing what tariffs do, which is reduce near-term inflation due to a drop in demand, and then increase inflation further out. What would you do if you were the Fed right now? I mean, for July, I'd hold rates, and then September, depending on if tariffs come in exactly as written in the letters, and there's no trade agreements, then September I would hold rates, and December I would hold rates, and I would continue to hold rates until the tariffs were removed or the inflation effects from tariffs were realized. I mean, they don't have to hike unless inflation moves up too quickly. If inflation moves up rapidly, or if inflation moves above the Fed funds rate, so if we get inflation at like, 4 or 5 or 5%, then the Fed might have to move back into a hiking cycle. What Trump wants them to do is cut in the short term. Basically, what Trump wants is he wants them to cut in the near term while inflation is depressed, and then raise rapidly as inflation rises, which gives you a brief window of, soft credit conditions. Which, I mean, as much as I hate Trump, this isn't a terrible plan. It's just not going to work the way he wants it to. Because of the, like, if everything were perfect and everything were stable, yeah, that'd be great. But there's too many other factors. So he can refinance his debt. No, so the US can refinance their debt, of which he is rapidly creating more. But that's not a path towards fiscal responsibility, right? That's just like trying to kick the ball down the road a little bit. And the can's already been kicked for so long that, it's gotten very heavy. Like every time you kick the can, it gets a little heavier. And then eventually you're trying to like kick a boulder. Yeah, banks are still massively exposed to upside risk and yields. I mean, less exposed than they were, a year and a half ago, 2 years when I talked about it first. They have reduced exposure a little bit, and they've been aided with multiple treasury liquidity programs. Their prime dealers are being helped out by the Fed a tiny bit as we move closer to the end of like QT. But I mean, yeah, if yields go up, banks are still deeply fucked. And the rate at which like big banks are fucked is much higher. It's not just 5%. Like most of the big banks are fucked at like 5.5 or 6. The regional banks are where the trouble starts though, and that has a knock-on effect. So, if regional banks still are going to fail, start feeling pressure at 4 or 5, start failing above 5, then, that's going to just catalyze failure in larger banks because it becomes systemic very quickly. And that's what the Fed backstop aimed to prevent with SVB, was to stop the systemic risk in its tracks. I mean, we keep raising our deficits. We're fully downgraded across the board. So the next step is more downgrades, probably. Massive depreciation in the dollar. I mean, credit conditions are not nearly as tight as they should be because we have, carry trades to lend money against. It's all very delicate, yeah. But if you look at conditions in Japan, they're worsening at a much more rapid rate now than they were, a year ago. And they're really starting to drastically diminish the increase in their like forward wages, which creates like long run economic problems for them and can create a depression for them. So, eventually, while in the short term they're very much enjoying, all of that, all of the velocity and the money supply that's, paying huge amounts of transaction fees within Japanese banks. That can't last forever, and they're kind of building up. They're building up a debt that has to be paid on that eventually. So even if the next person comes in and reverses everything Trump does, how impossible would it be to fix things? I mean, even if you came in and reversed everything Trump did, it's not like the Democrats weren't just spending out the ass also. I mean, the fiscal irresponsibility in the United States has been going on for 30 fucking years through both parties. So this isn't like a Trump specific thing. This is just a economic thing. Like you can only foist so much, just so much debt off onto future generations before, and with the passage of time, before you start to catch up to all of your mistakes. And that's what we're approaching. Higher corporate taxes is one solution, but they need to be significantly higher than they are now. Higher taxes on the wealthy, fewer loopholes. So the tax code basically needs rewritten from the ground up. Um, no, it's not because of the gold standard. I mean, gold standard wouldn't even work with current modern monetary like strategy. It just creates illiquidity in currencies, which is not something that we want. It's very hard to demand both. But here's the problem. You know, even if you have like a progressive agenda, it's very hard to demand both higher taxes and higher pay from corporations. I mean, you got to pick one. I mean, that's the problem that I have with like a lot of progressive agendas that are like, oh, we're gonna fix all these things, is because you can't really fix all of those things at once. Which is okay, yeah, sure. I mean, but then you're talking about something else, right? Yes, we outnumber them. If at any point Americans unanimously decide corporations should not have this much money, rich people should not have as much money as they do, then yeah, we can take it all. But that's not happening. That would require, you know, probably a high level of education at the center of the distribution. No, I mean that's what a capitalist society, um, you know, we exceptionalize all of the qualities of being rich as I mean this is why everybody in the US thinks that rich people are intelligent or capable, when a lot of them are just nepo babies. Like most wealth is just inherited from somebody else that was intelligent and, you know, capable. I mean, I like capitalism. It doesn't mean there aren't problems with it. I mean, you'd have to raise the minimum wage to something that people could actually survive on, and then as minimum wage rises, all of the costs of everything would also go up. So we just need much more regulation on corporations and how they operate. Or if we're going to let corporations operate, you know, at the peak of their potential greed, then we need to um, equilaterally distribute their profits among the populace, which makes a very good case for everybody owning a bit. Yeah, yeah, 99% tax on over 5 mil a year. Could do it. I mean, corporations need more money than that to operate, but you either have to pick, do you want a system that can work within our current system, or do you want a new system? And while a new system would be better, it creates, you know, you have to create a power vacuum at some point to get there, and that creates a very real risk of ending up with an outcome that was not initially planned. No, they don't teach any of this shit in school because they don't want people to know. They don't teach any of it even at like a basic academic level either. Like once in you know secondary or you know fuck even in postgraduate study they only start to touch on a lot of this stuff. So information is valuable, especially information on how to make money. Anyway, yeah, let's take a look at SPX for the week. Uh, so I mean, we're still very much in a period of like upward consolidation. Um, we did get a new high, what was that, like Friday morning? Um, no, I guess we got a new high on Thursday and then broke out a little higher Friday morning before closing lower by the end of the day. We still closed under the major level at 6,300. Um, I would say that that is obviously a failed breakout of the upside trend here on ES. That does open a move back to the downside to find more buyers, but it looks like we got a little bit of support into the end of the day there before things shut down for the weekend. I don't think any of the news over the weekend was all that impactful, so things will probably still open fairly stable going into Monday. Um, we do have the tech earnings coming this Wednesday. That's going to be a stabilizing factor for the market. We have a JPOW speech on Tuesday. I will say that if JPOW is very clear on no rate cut for July, that could cause some repricing tomorrow. So that's a potential catalyst for maybe some downside. Then we have like home sales. I think towards the end of the week we have S&P PMIs. Um, yeah, we have S&P PMIs, some new home sales shit, and then Friday we have durable goods, which could be interesting. Durable goods orders are expected to fall dramatically um, from May. So May was the realization of all of that front loading from April. So now we should see durable goods orders shift back, and that into like Friday, and then next week we have like the week following this week we have labor data and FOMC, which are both going to be super important. So this week, not too much data. I would say positioning is slightly weakened following the OPEC's expiration. Obviously, we've got some delta falling off, right? I mean, we had son of a bitch. What was that? So we had about 1.4, 14.2 billion in gamma falling off of the short dated chain. Um, 39 point, uh, 39.14 billion in delta, and then on SPX, I'm gonna be sad when Gamma Strike launches for real. Why? Um, we had 14 billion in gamma fall off on Delta Friday morning. And then 272 billion in Delta also fell off Friday morning. And it looks like the August expiry is not super loaded up. Very very low Delta. Hmm, decent gamma for the August expiry, but that's more to do with the amount of time. But very little delta, especially compared to September. So I would say between now and like the August expiry, price ranges should open up a bit more. there should be a little more leniency in supports. They should be less restrictive to like intraday price action, which could open up a move in volatility. Um, ooh, things are different, huh? I'd say IV10 moved up pretty sharply on Friday. Now about equivalent with IV30. IV30 is still fairly well above HV30, and then HV60 has been coming down a lot, but now below. So we might get a period where we see like longer dated short vol come in, but less interest in near term short vol. I'm aroused with the new. Yeah, we've got some stuff we're working on pushing out. We're getting pretty close to finalizing everything, and then that'll mean like almost all of the pages are getting some kind of update or another, and they should all start to work a bit better on mobile. The new vol page for I think it's just out to beta right now. I'll check on it today and see if we're ready to push it out to everybody. If all the bugs are fixed and everything, then I think we'll be pushing that out to everyone pretty soon. Maybe we can get it out by tonight or something. I think I'm starting to get it, and it makes me just as nervous as it does excited. Nice. Anyway, so with all of that considered, I would say this week might have like a bit of downward drift, but largely stable with like the biggest impact potentially to price probably either coming at the end of the week from durable goods or from Powell on Monday. So I'm gonna say like maybe go back to like 60 to 50 by the end of the week. I think we kind of might have topped out to the upside, at least in the very short term. Uh, hmm. Yeah, all right. And I don't know if Dork or JFresh won last week. Trump ruined my prediction by tacoing on the JPOW firing. Although I was pretty close in the first half of the week. Yeah, kind of right in between Dork and JFresh. But neither of them are here today, so I would say probably just down. I guess there's if Powell insinuates a rate cut, might get something like that into end of week. If durables is really nasty, then maybe there'd be like something like that. But that would mean durables comes in way below the already extremely low expectations. So anyway, thank you guys for tuning in. I'll be around the rest of the day, so if you have any more questions, feel free to hit me up. Um, Either in chat or you can shoot me a DM. I'll be around. Thank you guys for tuning in. We'll catch you later. Peace.